Hi everyone, welcome back to the US CPA classes for regulation exam. In this particular video, we are going to discuss in detail about installment sale. Yes, the US individual taxation gross income part 6 installment sale. So let's dive into it. Next topic today we are covering is installment sale. Any idea about what is installment sale from your
Hire,
school days? What
hire
is
purchase.
yeah? Higher purchase. Yeah, what is higher purchase? Just for the benefit of everyone, if you can share.
If a person is taking any product or buying any product on installments,
Mm-hmm.
then they are paying the amount in different installments. Yeah.
Mm-hmm. Yeah.
So,
So yeah, more or less you're good. Anyone
Sir,
else would like to add?
it also include contractual completion sales.
Mm-hmm.
and the ownership will be with the buyer. I mean, with the seller
With
till
the
the time.
seller.
Yeah.
Yes. Yeah, the key point is till the time seller receive last installment, ownership will still remain with seller. Right? For example, let's assume there is a small electronic shop, right? Let's assume the taxpayer is selling maybe air condition or refrigerator, right? So there are many people who come and buy the air condition or refrigerator on installment sales, right? So in that case of scenario, like the installment which an individual is recovering within the same tax year, right?
Sorry, sir, I have to hold you. Uh, the screen we are sharing, it's showing capital gain or loss in installment sale,
Mhm.
not in the regular business income.
Yeah. So I have not reached to this discussion yet. I'm
Okay,
still explaining the concept, what is installment sale, and then we jump into the concepts.
okay.
So as of now, I have not reached to this, like the concept thing. We are still discussing what is installment sale first. So, like I know some of you have fair idea about installment sale, but some students may not have. So that like everyone is on same page. So installment sale is basically, let's assume, like you have a taxpayer has a small shop in which he or she is selling maybe refrigerator or air condition. You might have experienced and seen maybe like some of your neighbor shops also. They give those equipments on installment sales to many people, right? But key thing is the ownership will still remain in the hand of seller until and unless last installment is being received. And after the last installment, it is being transferred to the respective person, right? So this is how normally like installment sale actually work. So here, the IRS, which is Internal Revenue Service Department, so they understood this point very well, and they have given the option to the taxpayer. You have an option, you can consider this as an upfront revenue when you are making the sale. At the same time, you can consider entire amount receivable as a revenue, or you have an option to elect this under the installment sales rule, right? So both the options has been given to the taxpayer. They can keep on considering this sales as the ordinary sales and book the entire revenue, and whenever later on they will receive the money. But like practical experience says, in most of the cases, the client does not pay full payments in general, and so most of the time they need to forfeit the asset, and there would be other credit problems and challenges, right? So considering that fact in mind, so what IRS says, you have an option if you want to consider it for the sale as an ordinary income, you can consider that, or you can use installment sales method, right? Some of the company who have tie up with like some NBFC, right, and that NBFC take the responsibility for collection of the EMI. So in that case of scenario, they all are started recognizing their income upfront because they are receiving the money full. Hmm? But on the other hand, there are some company who started providing their own financing arrangement and should have been gone to the hire purchase type of arrangement or maybe other EMI arrangement from their self itself. All right. So in that case of scenario, the IRS says you can apply and use the rule, right, of installment sale, right, that can help you deferment of tax payment. So what is the installment sale rule is, installment sale rule says whatever the collection you have made during the year and how much proportionate of that is to be considered as your taxable income, you can consider only that much amount as taxable income for current year. But the situation is that one, that hire purchase or installment sale arrangement should be more than 12 months and it is spilling over to the next or following financial years. Right? If you're receiving all the installment in same year, then it is not an installment sale. It has to be considered as a normal ordinary sale. But if you are receiving the payment after 12 months, right, then it is being considered in the category of installment sale. So three things we need to be keep in mind. One is, when this particular assets or property is being transferred or sold, and who is having the ownership right. Second category is for the businesses, like who is looking for the fundraising, right? So for them, it has to be considered that whether they are taking the risk or ownership or they're passing on the ownership to third party. Like in India, we have like Liqui Loan, Eduvance, right? And there are many other company, ATM Bank, or you can say Bharat Pay Bank. So they also provide such kind of financing arrangement. In that, they give you the money upfront and they take care of collection of the installment. And for that, they charge certain, you can say, discounts, right? So this is like high level concept. Installment sale, IRS says you can consider that as a normal sale, or you can consider into the special rule of installment sale, because as you are not making collection, so you may not be in a position to pay taxes on entire income. Hence, you can consider this as an installment sales rule, right? And majority of the taxpayer do use installment sales rule because they pay taxes from the collection, right? And how it actually works. So I'm still sharing like high level overview. We'll get into the detail. But how this installment sale rule actually work? The installment sales rule. Maybe I can explain through an illustration. If you can note it down in small illustration. For example, do you have your notepad and pen with you by any chance? Guys, do you have like notepad or pen by any chance with you? Or shall I put on Excel sheet? Hmm? Are you
I
guys
I
yeah,
have it.
okay. Maybe just for the benefit of everyone, let me put into that Excel sheet. So let's assume Mr. A sold air condition. Let's assume the sales price is, let's say, 3600, and installment maybe 36 or $100 each. Um, Period and amount, and let's assume cost. Cost is, let's say, 2,400, right? So what is profit? How much is the profit? 3,600 minus
1,200.
2,400, right? 1,200. Clear, everyone? So this installment period was of 3 years. So in year one, Y1, Installment received is how much? 1200, right? And how much profit need to be recognized? What it says, first you need to identify the GP ratio. So
Hmm.
GP ratio is how much? GP ratio is 1200 divided by
24.
3600, almost 33%, right? This is your GP ratio. So in this 1200 collection, there is how much profit? $400 profit,
Right.
right? So you need to pay tax on $400 in year one. Same way 400 in year two, 400 in year three. So when you are using installment sales method, then you are applying this formula. But if you are not using installment sale method, then entire $3,600 will be considered as taxable income. Make sense?
Yes.
Hmm. So now let's come back to the theory part. So first look at right hand side, ordinary income and loss. That means when you are not using installment sale method, it applies like an inventory when property is held for sale as an ordinary course of business, and section 1245 and 1250, the gain must be recaptured as an ordinary income, gain or loss on traded security to establish the security market. Left hand side, if you see the capital gain or loss or installment sale rule. This rule apply when taxpayer receive at least one installment after the tax year, right? So first important thing, if you have to apply the installment sale rule, then installments must be carry forward or maybe go up to the next financial year or next tax year, right? If you are receiving all the installment in same tax year, then installment sale rule does not apply. This method can be used to report the gain or loss on a basis of time shared unit, property used or produced in the farming, or residential real estate lot if the seller has made no improvement to the lot. If you see the calculation here of gain and loss, gain recognized is equal to total gain multiplied by the payment received during the year divided by contract price. So in our example, total gain was $1,200, right? And the payment received during the year was 1,200 divided by contract price 3,600, right? Hope you remember the formula or the example. Accordingly, we reach to the gain of $400 need to be recognized. So total gain is equal to selling price minus the adjusted basis of property minus if there is any selling expenses. So that all you need to adjust. And the contract pricing. So contract pricing is also very important for understanding purpose. Contract pricing is equal to sales price minus any reseller liability. Sorry, minus any seller's liability that is assumed by the buyer. That means, for example, you have a piece of, you have like a household property, let's assume, right? And you wanted to sell that property to me under the installment sale, right? So let's assume the fair market value of property is $100,000, right? And you already have a running loan of $50,000. So you said you give me $50,000 cash and take the property along with the loan, right? In that case of scenario, what is my consideration which I have paid? $50,000 which I have paid in cash and $50,000 the loan which I have assumed for which I'll be making payment in future period, right? So that is called contract price. Once the installment sale rule apply, the taxpayer must use the same unless elected out. However, when elected out, taxpayer need to report the entire gain from the transaction in the year of origin. So what does it mean? So if you are using installment sale rule, then first thing is that you need to apply this rule consistently period over period. You cannot say like this year I'm using installment sale rule, and then next year collection rule, and the following year any different rule, right? So first you need to make sure
नहीं है अपने पास कहाँ है
you'll be using it consistently. 1 second. Is this?
नहीं है यार लाना है अभी
Yeah, I request, if you're not speaking, please be on mute to avoid the disturbance for other. Right. Coming back to this note, what it's saying. So if you are using installment sale rule, right, then you need to consistently follow that rule in the year. If you are changing, right, first you need to take the approval of the IRS plus any past income which you have not recognized, because you are recognizing based on the collection. That all income you need to recognize in the year when you are changing the rule, right? And you need to pay taxes on all of it. Clear so far this table? So other matters that are impacting the installments. Generally, if a taxpayer disposes of the installment obligation, the remainder of the gain under the installment sale is accelerated and must be recognized in the year of disposition of obligation. It means, for example, you have given a refrigerator on installment sale, and the person is not providing you installment. So you'll be forfeiting that asset, right? And after the forfeiture of that asset, what will be your next step? You'll be selling that property. You'll be selling that asset, right? So in the year of disposition of that asset, you'll be recognizing your final gain or loss, right? That is what the point number A is. Second is a taxpayer can make an election not to use installment reporting method. This election is made by reporting all of the recognized gain from installment sale in the tax year of the sale. So taxpayer can make an election not to use installment reporting method, which we were discussing earlier, but for that, in the year when you're electing not to consider as installment sale, you need to pay taxes on the current year entire income plus the earlier year pending income which you have not recognized. So for both, you need to pay taxes in the current year. Third is taxpayer must receive IRS permission to revoke an election and not to use installment sales reporting method. So if you wanted to revoke, then you need a IRS. Clear? Installment sale, any doubt? Shall we do some practice question? Oh, there is only one question. Okay, shall we do this question?
Yes.
Which of the following
Sir,
statement is yes, Prakash?
sir Rakesh.
Yeah, Rakesh.
So sir, sale on installment basis will only apply where the seller is receiving payments in installment basis.
Yes.
However, in case buyer choose to finance and seller get payment all in all together from the financer, then this option will not be applied, right? It will be
Very true.
considered as
Very
a
true.
regular
Yes.
sale, right?
Yes. Yes. So, for example, I was discussing some example. Like there are a couple of NBFC in India also, like Liquiloan, Eduvance, like Money Pro or Paytm or maybe Razorpay or maybe like I would say Bharat Pay, right? So what this company actually do, they give credit to the buyer, right? And at the same time, they make full payment to the seller. So when seller is receiving full payment, then he or she need to recognize the entire. Then it's not an installment, it's more of financing arrangement between financing company and the buyer. So it has nothing to do with seller. Right?
Okay, sir.
Okay, so let's do this question. Which of the following statement is correct if property is repossessed after making an installment sale? That means you are repossessing the property. The taxpayer does not recognize any gain or loss resulting from repossession. Taxpayer must recognize any loss resulting from deposition. Taxpayer must recognize any gain or loss resulting from deposition, or must recognize any gain resulting from deposition. Which option is correct?
Sir, option 3.
Why?
Taxpayer must recognize gain or loss resulting from
Both.
reposition.
Yes. Either it can be gain or it can be loss. In any situation, you have to recognize. Right? Any doubts so far? Sadaf, Giri, Chetna, so far so good?
Yes, sir.
Hmm.
Yes.
Okay.